Hello and welcome to Between the Lines, the podcast that dives deep into the stories redefining Asia-Pacific's reinsurance landscape. Recorded here in the newsroom of InsuranceAsia News in Hong Kong. I'm Andrew Mullen, Deputy Editor. I'm stepping in for Editor-in-Chief Miten Varkey, who is on holiday in India this week. In this edition, we will discuss the Air India crash, 4 exclusives we had on big personnel changes in the region, and the big events shaping the marine market. We will also bring you the latest stories that our reporters are working on. In this episode, we will also be joined by Vittorio Sangiorgio, Head of Investment Solutions at ILS-focused asset manager 12 Securis. He is going to discuss growing interest in cat bonds in Asia Pacific and also how parametric ILS can address the protection gaps in markets like China and Australia.
Cat bonds tend to last around 3 years. What does it mean? It means that climate change is happening, but it's somehow running a little bit slower than us. So we're somehow always one step ahead, being able to incorporate new variables, new information, new science into our modeling and into our pricing every year, so that we can keep up with this changing environment and make sure that we have a decent and a thorough analysis of the underlying risk.
So it looks like it's up to me to get this meeting underway. I'm delighted to welcome Special Projects Editor Kristina Shperlik.
Hi, thank you for having me.
And reporter Joana Nguyen.
Hi, it's good to be back to studio.
So it's quite ironic that Miten is on holiday in India when India is going to be the focus of today's show. It's been a busy couple of weeks for the country. We are seeing a lot of progress being made in the investigation into the Air India Flight 171 crash last week. And we already understand how it will affect the reinsurance market in terms of pricing and terms. This was a big story for us last week. It came in late at night, Hong Kong time. We were rushing around to understand what was happening. Kristina, take us through how you got some comments for this story in such a short space of time.
Yeah, I reached out to many people, to many good sources I have in India almost immediately as soon as we found out about the event. I think I sent like 40 messages and we got many interesting responses almost immediately around 5 p.m. on a Thursday evening.
Right, it was a hustle evening for all of us when the plane crash happened. Trying not only to, contact Indian sources as many as possible, but also monitor local media reports to have the most updated loss numbers and the details of the incident. And it was just tragic to see the devastation as the story unfolded.
I think how you guys approached the process of choosing a picture was also interesting.
Yeah, I mean, when we think about the story, we also need to present it as well. And finding pictures of this event that we could use was quite difficult, but we were able to find some pictures from, I think, India's official rescue agency. And they had some live, pretty good images on their social media accounts pretty quickly. So it meant we could have some pictures from the ground, from the crash site to illustrate our story.
Right. So most of the pictures are in the vertical dimension, but then we need landscape pictures for the website. So we came up with an idea that we will blur the picture and then set that as a background and then put the vertical version without blurring on top so that it can be it can fit our landscape dimension.
Yeah, I think you guys did a great job and quite fast as well, so I was pretty impressed. In terms of the story, I think it's interesting to see how it's developing after the event. So now we are seeing a legal investigation that could lead to higher liability payouts, depending on who is proven guilty. If it's Air India, the average payout in the UK could be 1.4 to 2.7 million US dollars. If it's Boeing or the US manufacturer, then the average payout per passenger is 8 to 12 million.
And it's been a busy time for India. We've seen events in the sea as well. Insurers are expecting claims from pollution liability, cargo loss, wreck removal, third-party damages from the MSC Elsa 3. This ship sank near the southern Indian coast of Kerala. The container ship One High is being stricken by fire also, and that's being towed away westwards away from the Indian coastline to avoid more pollution damage. But we're going to be keeping an eye on those stories because they're definitely developing. And sticking with marine insurance, we're seeing some interesting developments happening on the P&I landscape. Joana, you've been talking to a lot of P&I clubs recently.
Yes. So the largest P&I club in terms of premium and membership size, Guard, has recently appointed Andre Kronberg as its new head of Asia business unit. This is part of its global strategic restructuring to establish 5 market-facing syndicates, including the Asia business unit that I just mentioned. This is pointing to a bigger general trend of Asia being a very important part of strategy for the P&I clubs, and portions of the region taking at least 30 to 50% on their books.
And Joana, you're collecting P&I clubs pretty quickly. You also spoke to the Swedish club.
Right. So the Swedish club told me that China is still a dominant maritime country and will continue to be so, irrespective of what's happening now in the short term in terms of politics. And also India is very exciting on what they see. There have been talks about building up capacity on everything from ports to shipbuilding, to building larger fleets to operate and handle the major flows of goods. But this doesn't come without challenges, as some of the goods are delicate. And this is something for them to keep a close watch on, and also look at what levels of strategy India and China are willing to adopt when it comes to, insurance markets and appetite for retaining risk within their own country.
And Joana, you've been really busy this week. You had also 2 exclusives.
Yeah, so I delivered 2 exclusive pieces this week, one being the appointment of WTW veteran Hirofumi Luke Nakamura as Senior Vice President for MASH. So he left WTW for MASH along with at least 2 more senior officers. And this is just one example of the talent battle happening among insurance brokers in Japan. WTW, when it was launched in Japan late last year, had also hired several talents from MASH, and MASH, of course, has hired many from WTW amid the talent battle. And the other exclusive that I got was the appointment of Koji Okumura as senior property underwriting for Zurich in Tokyo. He moved there following his 10-year stint at Munich Re as underwriter.
And the people movers didn't stop there.
Yeah, of course, the biggest exclusive move of the recent weeks is that Chelsea Zhang is leaving AXA to join Mark Kelly as Greater China CEO, set to start in July. And the last exclusive I wanted to mention is that specialty MGA RiskPoint appointed George Blackborough as head of W&I in Asia to expand their regional team to support growth. This is an appointment we've been tracking for a long time because we were not sure about the exact title. And this is interesting because it shows that the M&A market is finally picking up after being quite slow for the last couple of years.
And speaking of M&A, we've seen a couple of interesting deals recently as well.
Yeah, I think the biggest deal of the last 2 weeks is definitely Samsung Fire and Marine Insurance agreeing to buy an additional 21% stake in Canopus Group. This will increase Samsung's share to 40%. What makes it interesting is that it's the third investment in Canopus for the Korean insurer, following previous moves in 2019 and 2020. And we'll be watching this as it develops.
And Joana, you're across a move in Australia as well.
Yes, so there's a new consolidation within the Australia-headquartered AUB Group, which has been pretty active in M&A activities last year with 4 deals across the world. So its subsidiary AP Phillips, which is a broker, will become part of AEI Insurance Broking, which is another brokerage subsidiary of AUB Group. And the sale and merger of the 2 companies, effective from July 1st, will create a business with more than $227 million in GWP, operating from several cities in Australia.
That's great. Now let's turn our attention to what we're working on. Joana, do you want to kick us off?
Yeah, so it's almost 7 renewals, and I've been talking with industry experts on how's the progress. And to no surprise, they said it is now expected to be orderly and in line with what happened in 1/1 and 1/4, with risk-adjusted rate reductions, sometimes up to 2 digits, and plentiful capacity. But retention levels, especially on CAT-exposed programs, remain stable following meaningful increases over the last couple of years. In a couple of days, I'll be chasing an interview with Gallagher to get more insights as the renewals are finalized.
Sounds great. We're also going to be keeping an eye on the India air crash, We'll be keeping an eye on the marine events with some new ones which just came in overnight. The 3 ships catching fire in the Gulf of Oman. That's potentially causing problems for global shipping, given its strategic location. We're hearing different bits and pieces so far, but what we know, or we think we know, is that this incident off Oman was a collision between a tanker and a vessel from the Dark Fleet. And obviously this is a developing story, but what we know so far from our sources is this is a collision between a tanker and a Dark Fleet vessel. But it's important to know that they're telling us this does not have a direct relationship with the current conflict between Israel and Iran, but just happened to be in the nearby Straits of Hormuz, about 150 kilometers away, but still nearby. And this region, this part of water is very important for global shipping, which is why a lot of attention's been played on it. But it doesn't appear to be a war loss. If the Dark Fleet vessel was involved, which we think, we also believe its automatic identification system was turned off, which basically means the other ship didn't know it was there. And then let's switch over from the Dark Fleet in the Straits of Hormuz to the area of art. Kristina, you've got something on that?
Yeah, I'm working on an art and species story, which is quite interesting. And what I found out is there is an increasing demand for this line in Asia, driven by increasing wealth in the region and digital connectivity among collectors. So major art fairs and exhibitions and auction houses are optimistic about the region, with new offices opening in Hong Kong for emerging collectors. And of course, something typical for Asia here, art is also seeing increased damage from climate change, typhoons, floods, and rising humidity levels. The majority of claims come from damage during transit, especially when artworks are exposed to humidity. What I found out was that the majority of claims arise from damage during transit, especially when artworks are exposed to humidity. Marine transport is often chosen because it's efficient and because of its low environmental impact, but it makes artworks more exposed to humidity, heat, and flooding. And of course, all the risks of being on the open seas.
Kristina, you're going to be taking care of our feature interview this week. Who are we going to be hearing from?
I will be talking to Vittorio Sangiorgio, Head of Investment Solutions at ILS-focused asset manager 12 Securis. It's very interesting because they're based in Switzerland, but they're driving a lot of interest in Asia because they're trying to close the protection gap through cat bonds. We will be talking about the growing interest in ILS and Asia Pacific and how climate change is really affecting the way market is evolving. Vittorio, thank you so much for your time. Talk to me about the growing interest 12 Securis sees in Asia and what factors are driving it.
Hi, Kristina. Thank you very much for having me today at this podcast. I'm very excited to cover ILS and the exciting growing area for both investors and cedents company. From an investor perspective, we've seen ILS as the extremely attractive asset class, and the investors in Asia are also starting to look at this. I think there are 3 areas which make the asset class extremely interesting. The first one is the limited correlation to traditional financial markets. And the second one is the low volatility. And both these elements are extremely interesting for investors, particularly in the current geopolitical environment. Every day we open newspapers and we see something new is happening. Needless to say, the tariffs war that was caused by the Trump presidency, you clearly see investors are looking for a more stability and decorrelated asset classes. And the other element is also attractive returns. I think ILS has been under the spotlight of Asian investors because over the past 2 years, we have had the mid to high teens returns in 2023 and 2024. And the asset class overall have generated for the past 20 years north of 7.5% in dollars. So growing interest from the investor standpoint, but also from the issuer and sponsor perspective. So ILS can provide an additional layer of protection to a balance sheet of an insurance company or a reinsurance company. And it is also becoming a more standardized and frequently used tool for cedents. And I was listening to a podcast that you have had recently with Ian from PICRE that was also mentioning that they tapped the market with cat bond recently. And I think this is exactly also what we see, that is becoming a more accepted and frequently used tool. There's less execution risk for cedents to tap this market. And this is also growing more attention to the asset class and more interest. We often talk about cat bonds, which are one of the ILS instruments. But we should also not forget there are also different type of ILS instruments. Think about quota shares or sidecars. And these can also be seen as an attractive tool for Asian cedents for growing their underwriting capacity, for example, but also from an investor perspective, from an end investor perspective, they can also be a way of diversifying risk.
I understand why so many people want to talk to you, but can you tell me more about how you're approaching the conversations? What is your strategy in the region?
One of the biggest challenges is to get investors familiar with the asset class, which is relatively new compared to other geographies where investors are more familiar. And the way we have been approaching this is being a lot more active, actually. I was saying be more active, but actually is much more than that. We have been present in the region several times. We have leveraged on one event we organized, for example, in Singapore in November last year, with the participation of the regulator, the stock exchange. We have had a similar event last week or a couple of weeks ago now in Hong Kong, organized by the Hong Kong IA. We had participated to webinars and events in Australia. And we also have an office in Japan that is there to be close to the investors and investor base. So the way we're doing it is try to make sure that the asset class becomes more popular, become more understood, because investors have to get, on one side, comfortable with the upside potential, but most importantly, they have to be comfortable with the risks and the underlying risk they're taking, basically. Also, another things we're thinking of, I think is important to be close to investors. A lot of the ILS managers, they're typically based in Europe or headquarters in Europe, in Bermuda or the US. There's a little presence in Asia. So we're also contemplating opportunities for us to be a bit closer to the investor base, closer to the cedents. And we're evaluating opportunities for strengthening our local presence there.
I understand why Asia Pacific has so many opportunities for you, but it also has some challenges. And one of them is, of course, climate change. So can you tell me a little bit about how climate change is affecting your risk assessments, how you're changing your modeling strategies to ensure accurate investment decisions?
First message, I think that it's important to acknowledge that climate change is a driver of risk. Over 600 studies conducted highlight that 70% of the weather events were made more likely or more severe because of climate change. We should also not forget that climate change is one of the elements that drive insured losses. We've also have other elements, for example, inflation, labor cost, but very importantly, population dynamics. People like to be on coastal areas. People like to be in areas which tend to be exposed to risks. But back to the climate change. I think another element which is important to flag is also climate change affects perils differently. There are some perils which are much more affected than others. If you think about everything which has to do with floods, for example, tend to be more affected. Everything which has to do with a lot of water or not so much water, so drought or floods, tend to be more affected. And then you have perils like earthquake that are relatively insensitive to climate change. So one important message as an ILS manager, like us, is also to pick and choose your perils so that you can ensure that you are focusing on those which are either less exposed to climate change or that are exposed to climate change but still can ensure to be well modeled and well understood. One other important thing that I'd like to flag is that an investment manager can and actually must have a view on which perils are more attractive, better modeled and better priced. Understanding extreme weather risk is essential for insurers to provide sustainable products, but also for investors and ILS managers to achieve acceptable and balanced risk and returns. As a 12 Securis, we are around 100 people, and we have a large and capable team of scientists, underwriters, analysts. They spend their days assessing the impact of climate change and climate variabilities to generate our own view of risk. What is our own view of risk? Is basically our adjustments to the standard vendor models. And I stress the S at the end of models, because we have a multi-model approach. So we use different vendor models, different sources of information. We adjust them to create our own view of the perils and their frequency and their likelihood of occurrence. Maybe one example, because I think examples are great to put things into context. think about the California wildfire that happened at the beginning of this year. This was one of the largest wildfire in terms of insured events, talking about several billions of losses. If you blindly believe at the modeling output, you'd probably price an event like the one that happened at the beginning of this year as a 1-in-100-year event. We have a different view. Based on our assessment, this is an event which has a likelihood of occurrences of roughly 1 in 30 years. So you see the big difference, the big gap. It's not wizardy. We just simply take the model. We apply some uplifts due to recent losses, to climate conditions, to factors such as the proximity to power lines. So you see, it's important for an investment managers to have the tools to understand the models, fine-tune them, and make sure that the output is adequate and relevant and allows us to price the risk correctly. Last thing that I would like to flag, and we've had conversation, Kristina, before, and I always repeat this example, which I really love, and I think it's also good for investors and people interested in the asset class. One of the beauty of ILS, of insurance in general, actually, is that you reprice risks very frequently. Insurance contracts last typically 1 year. ILS contracts, similarly, 6 months to 1 year. Cat bonds tend to last around 3 years. What does it mean? It means that climate change is happening, but it's somehow running a little bit slower than us. So we're somehow always one step ahead, being able to incorporate new variables, new information, new science into our modeling and into our pricing every year, so that we can keep up with this changing environment and make sure that we have a decent and a thorough analysis of the underlying risks.
Yeah, I think definitely whenever we talk about climate change or big events, one thing people always talk about is modeling, and another thing is parametric. So I wanted to ask you, how can parametric ILS address protection gap, which is a big topic for us here in Asia?
First and foremost, parametric, we believe that are an excellent way for insured party to receive immediate payout. Sometimes insured parties like hotels, condominiums, industrial plants, they cannot wait for an traditional insurance payout that might come in 6 months, a year or so. The beauty of parametric is that you get the cash into your account relatively quickly. We're talking about days. The second thing is that parametric deals are highly customizable. Even more than a traditional insurance policies, you can really make sure that you cover exactly what risk you want to cover and exactly in the location and the specificities of your needs. And it can be complementary to the traditional insurance. They can cover perils that some traditional insurers might be a bit more reluctant to cover. And I link it now to the region that sometimes traditional indemnity or index-linked transactions are not possible in certain geographies. These might be because the modeling is not adequate, or simply because, for example, for some industry index transaction, there's no index, or there's no index that has been enough tested over the past years. Parametric allows for a transaction to be possible and for the peril to be covered. And maybe from an investor perspective, and from an ILS manager perspective, why ILS is important and why parametric ILS is important. If you think about how we model transaction, you typically model different elements. You start with the hazard, with the stochastic event modeling, and then you overlay exposures, financial losses, and so on and so forth. If you look at parametric transaction, the key focus would be on the hazard and the stochastic simulation of the events, and you'd be less reliant on exposure information, for example, the quality of the roof of a property, when the foundations were made, and so on and so forth, simply because the trigger is not based on the exact loss, on the incurred loss, but they're driven by a parameter. So all the exposure analysis is less relevant in the parametric space, where you focus more on the hazard and the stochastic simulation. As I was saying before, sometimes industry indexes or reliability of data is not even nor consistent across the region in Asia, so parametric can be helpful for investors. And lastly, which is also important to remember, parametric transactions are often relying on bespoke models. So yes, they are a fantastic tool, But you also have to be able in-house to understand these models and making sure that the risks are priced correctly. Let me maybe highlight a couple of examples. Historically, there's a lot of parametric transactions focused on U.S. perils. These are typically U.S. wind, U.S. earthquake. But we've also seen, for example, some cat models, some cat bonds recently issued from Asia, which have a parametric trigger. Parametric trigger that covers, for example, a China earthquake or earthquake in different other geographies. So we see there's an increase use of these parametric triggers, includes increase of parametric transactions, and we believe the growth of these sub-asset classes is going to be much faster than the one of the traditional insurance and ILS market.
Thank you so much, Vittorio. I think it's really interesting. I see you are doing many great things in Asia, and of course, after the recent merger, I think you have many plans as well. Can you just walk me through the next steps for 12 Securis in Asia and maybe give us your view on how the market will evolve over the next couple of years?
Yeah, definitely. So maybe one thing to put things into context. If you think about the protection gap across different geographies, Asia is one of the areas where the protection gap is the largest. If you look also, for example, at penetration rate, so insurance P&C, insurance premium to GDP, we're basically at 2.2%. The overall world is around 4.2%. So just by simply catching up with the world averages, we would have 500 billion of potential premiums coming in. China is probably the biggest and the largest untapped market in terms of potential. So this alone means that there's going to be a lot of growth drivers in the market. Also, we mentioned it before, climate change, catastrophic event, even just the perceived increase in event frequency and severity will also be a driver for growth in insurance and together with it for ILS. So this is a little bit our view in terms of growth potential of the underlying markets. And we believe there's also, following the discussions we had with investors, there's a large pool of capital that can be deployed in ILS. A lot of investors also like to support the industry they're working with. So we see investors also interested in cat bonds or transaction that covers local risk. So we see really an alignment of interest between the market, which is set to grow, the investors which are becoming more familiar and interested in the asset class, the industry participants, which are more willing to bring risk to the markets. But also, when I talk about industry participants, I also think about the regulators, which are supporting the issuances of ILS or the overall ecosystem of ILS. We're talking about brokers, we're talking about lawyers. So there is a strong alignment of interest amongst parts to make the sector grow. Looking at us, as I was mentioning before, I think we certainly plan to be even more present in the region. We have been already several times this year, and we plan to continue to be locally active. And as I was saying before, we target to have a bit more closer presence with investors and partners there, strategic partners we have on the field already, and potentially have a more localized presence going forward. Asia Pac is a large region, clearly. I haven't mentioned it before, but around 20% of our investors, they're based in Australia. So Australia is an area which is a more developed one, and more familiar with the asset class already. We have Japan, where we already have an office. And when I'm talking about increasing our presence, it's more in areas like China, Hong Kong, and Singapore, which are more the growth drivers in the area.
Maybe we'll see you soon in Hong Kong. Vittorio Sangiorgio, thank you for your time. It's been very informative.
Thank you, Kristina, and definitely we're going to see each other very, very soon.
And that's all for this episode of Between the Lines. Don't forget you can connect with us on LinkedIn and tell your friends to follow us on Apple and Spotify. And you can subscribe to our daily and weekly newsletters delivered straight to your inbox. And of course, we'd love to hear your feedback on the podcast. Email us at editorial@InsuranceAsia.
Who wants to get
Who doesn't?
yeah. What happens when you can't replace text? All right, and of course, we'd love to hear your feedback. And
And of course, we'd love to hear your feedback on the podcast. Email us at editorial@insuranceasianews.com. I'm Andrew Mullen. Thanks for listening.